Welcome back. Let's straight away turn our attention to the commodity markets. Over to Manisha for the latest. Manisha.
Thank you so much for that. I'm looking at the soft commodities today. We haven't spoken about agriculture in a while, and that is because there is enough production. Inflation has been under control. But in the recent few weeks there, we are looking at strong demand coming into the markets. There are trade deals happening, buying happening. And then apart from that, the lower stock in the very immediate term seems to be supporting many of those agriculture commodity prices there. Take a look at the Baltic Dry Index. That's trading at a 7-week high, is telling you that there is that global trade back in the markets, and the higher freight prices seem to be rising as well. There is some bit of a backlog in the Black Sea as well, and that seems to be supporting many of these global markets there. Rapeseed prices are trading at a 15-week high as well. Edible oil as a sector has done quite well for this current year, 2025. When you look at the soybean prices, well, they are also trading at a 1-year highs. The last time you saw these kind of prices were in July 2024. Much of the support from soybean has come in on the back of US and China trade agreement, and China saying that it will continue to buy US soybeans that it had stopped buying in the last 1 year. So China has bought 7 cargoes from US for the December and Jan deliveries there. The USDA, in the meanwhile, also has trimmed the world production by 4.10 million tons to 421. So that lowering of global production and then China suddenly buying into the markets has been supportive. The USDA, that is the US Department of Agriculture, also has trimmed the global ending stock estimate to nearly 121.9 million tons. So everywhere that you look, you have supportive figures coming in on that. Not just edible oils, rubber prices also are trading at around 2-week highs, and this is on the back of rising auto demand from Brazil. China demand seems to be stagnating, but it is LATAM demand that is picking up. And then apart from that, there are supply constraints now coming in from Thailand because of the heavy rain there. That in turn also has been supportive. The other one on my radar is corn prices trading at a 5-month highs. Now, Brazil is turning a lot of corn instead of sugar into ethanol. So you have strong demand coming in from there. And then it also is about South Korean buyers buying very strong. Logistical delays, as I said, out of Black Sea region has been supportive. And then record US exports for the current year have taken the prices on the higher side. Take a look at wheat prices, and that's the last one on my list here. That one in the global markets is trading at a 4-month highs. The USDA has raised world production and ending stocks as well. So while that should be putting pressure on prices, but what is supporting is the aggressive buyer that we have seen in the very near term and the scarce prompt availability. So when you look at strong buying from much of Asian countries, North Africa has been quite supportive. Now let's talk about India, and the dynamics seem to be changing somewhat here. India's wheat output last year was a record 117.5 million tons. This time around, with the way Rabi sowing seems to be headed, we are looking at 119 million tons. So that's back-to-back record numbers coming in there. Last year's government procurement was the highest in last 4 years at around 30 million tons, with expectation that you could be looking at this number increasing yet again. Now, thing to watch out for is while the wheat exports have been suspended since 2022, but we do understand that there is conversation between Ministry of Agriculture and Commerce where wheat products perhaps could be exported to the tune of 1 million tons. That clearly is supportive for the FMCG companies in the Indian markets there.
All right, Manisha, thanks very much for that. That's agri-commodities in focus. Today, we take a